This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss the conflict between Israel and Iran and what it means for global financial markets. Now, you'll hear people commonly say, in times like these, it's important for investors to maintain perspective. And yes, that is very true. However, it is equally important for investors to maintain perspective during the good times as well. As we can see by current events, anything can happen at any time, be it good or bad. Now, what began with Israeli strikes on Iranian nuclear facilities and military targets on June 13th has led to retaliatory attacks. While the situation is still unfolding, recent reports suggest Iran may be open to ending hostilities and resuming nuclear program discussions. For investors watching these developments unfold, it's natural to feel concerned about potential market impacts. The key question many are asking is whether such conflicts could escalate into broader global confrontations that would lead to significant disruptions in the market. In uncertain times and perceived certain times, history shows that disciplined, long-term approaches tend to serve investors better than reactive decision-making based on daily headlines. Over the next few minutes, we'll explore these topics further. First, this chart tracks the S&P 500 price returns around major geopolitical events indexed to 100 at the time of the event. The horizontal axis shows the number of days before and after. Like the current situation, geopolitical conflicts have impacted oil prices and raised global concerns in the past, such as when Hamas attacked Israel or during the Iranian drone strike against Saudi Arabia in 2019. Even during these periods, markets typically recovered from geopolitical shocks. As this chart shows, stock markets tend to recover and do well over the weeks and months following disruption, even if there is significant uncertainty. What mattered more in these periods was whether the underlying business cycle trends remained positive. All this being said, the impact of overall diversification can certainly help to smooth out the investing experience, especially when that diversification follows a multidimensional approach, incorporating buy and hold, tactical, and alternative strategies. Next, as this chart illustrates, oil markets have experienced significant volatility in recent years, driven largely by regional conflicts around the world. When tensions escalate, oil prices often serve as a key transmission mechanism, showing how regional events can quickly impact the global economy. We saw this dynamic play out recently when dynamic crude prices climbed above $74 per barrel when the Israel-Iran conflict broke out. While prices have since pulled back following reports of potential de-escalation, this volatility demonstrates just how sensitive energy markets remain to geopolitical developments. Higher oil costs translate directly to more expensive gasoline and transportation, which ultimately affects the prices consumers pay for everyday goods and services. However, it's important to maintain perspective on current price levels. Oil remains well below the peaks we witnessed in 2022 during the early stages of the Russia-Ukraine conflict, when prices exceeded $120 a barrel. One factor that provides some insulation for the American economy is the country's growing energy independence. U.S. oil production now exceeds 13.5 million barrels per day, making America the world's largest producer of both oil and natural gas. Finally, this chart demonstrates that the correlation between wars and the stock market growth is weak. Namely, there have been periods of strong markets following wars, such as World War II actually jump-starting industrial production following the Great Depression and helped propel economic growth for decades to come. Similarly, the Gulf War did affect oil prices, but it also coincided with the information technology revolution of the 1990s. Comparatively, there are other times, such as the Vietnam or Afghanistan War, where the stock market had a multi-year, prolonged weak period. Of course, we must acknowledge the serious humanitarian and societal consequences of these conflicts. In today's climate, much depends on whether conflicts expand or begin to de-escalate. When it comes to managing our finances, a truly diversified portfolio, which is positioned for a range of possible outcomes, that is aligned with your long-term financial goals, continues to be the most prudent approach for navigating periods of geopolitical uncertainty. While no one can predict the future, preparation is within your control. We hope you found these insights on geopolitical events and the oil market informative and thought-provoking. If you're a financial advisor and would like to learn more about our multidimensional approach to asset management, or explore ways to prepare your portfolios for a range of possible outcomes, visit us at dynamicwg.com or email us directly at info@dynamicwg.com. If you're an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.